So the first step is getting the pre-qualification paper. Let's go to the bank. I went to Steve from Santander Bank to ask him how to get the pre-qualification paper.
Hi, good afternoon. My name is Steve Roussel. I work for Santander Bank Mortgage. In this segment, we're going to talk about how somebody can qualify for a mortgage, a residential mortgage. A residential mortgage is a 1, 2, 3, 4 family property. I've been lending for 25 years. I specialize in first-time home buying, purchase, refinance, construction, rehab, conventional, jumbo. What we're going to be talking about this afternoon is what somebody would need to provide a mortgage loan officer, the information that they would need for the loan officer to help them on their journey to become a homeowner. I think the most important ingredient that there is the credit. And the credit is actually broken down into two pieces. You have the quality of credit and you have the quantity of credit. So the quality of credit is a credit score. And depending if you're using VantaScore or FICO score, there's going to be a range of credit scores that the borrower is going to be given. We need to know what those scores are. On the other end, there's the quantity, which would be how much do you pay per month for debt, such as car loans, student loans, credit cards, personal loans, co-signed loans, things like that. That's really the most important ingredient for someone to bring forward to a loan officer to get pre-qualified. The second is going to be the income. The income is really the second piece of the puzzle, where we're going to look for the last 2 years. We're going to look at your W-2s, your tax returns, your bank statements, your different schedules if you're self-employed. We're going to take a look at that information, and we're going to use the income that we have on those tax returns and on those documents. We're going to then get the income and the credit, and we're going to crunch numbers to do an income versus debt analysis. And that will pretty much dictate how much of a loan amount that you can qualify for. The third piece of the mortgage pre-qualification is where would you get the money to close on the house. There's 4 pieces. There's the down payment, there's the lender fee, there's the attorney fee, there's escrows such as taxes and insurance, and then there's a side bucket called reserves, which usually will be 2 months of the principal and interest payment on the loan. This money can be in your savings account, can be in your checking account, can be in your retirement. In some cases, you can get some money from relatives that would gift you money. Gifting is not a loan. Gifting is giving you that money without a loan. You could do that. The other thing you could do is have the seller pay your closing cost. They would pay the attorney fee, the lender fee, the escrows. They would not pay your down payment. They would not pay your reserves. Another thing that I have access to is what they call community seconds. Community seconds with municipalities, where some of the cities that you'll be buying in might have some money available, and then some of your employers might have some money to give to you to help you in your journey to home ownership. We can use these grants. We can use them whether it's the employer grant or whether it's a municipality grant, or we can use a combination of them. We can use a combination of the savings, of the community second, seller pay concession, and gifting. This will give you enough money to close on your property. I think the big overview is when you're talking to a loan officer looking to buy, the loan officer is going to look at the last 2 years of your credit. They're going to look at where you've been working for the last 2 years, and they're also going to ask where you've been living. It's called a 2-2-2 rule. So be prepared, if you can, to at least verbally in the beginning give the loan officer that information. What I'm going to suggest is a process that I personally use to pre-qualify people and then later on pre-approve people. Number one, you should have a 7 to 10 minute conversation with the mortgage loan officer. The loan officer will go over the 222 rule. The loan officer will verbally go over the credit, the income and the savings, and crunch some numbers for you. It's important that you do that. The second step is to then start getting the documentation. So get the last 30 days of pay stubs. Get the last 30 days of income if you're self-employed. If you're disabled or have Social Security income, bring those award letters. What you could do is bring a credit report to this meeting with that loan officer that you can get over the internet. That would be encouraging, so the loan officer would not have to pull credit for you at this time. And then what we would do is actually get the bank statements and get the money on where you would get the money to close. From there, what we would do is we would put you into the marketplace. You would go in there with a purchase price. You would go in there with a loan amount. You would know what your taxes are. You would know what your insurance is. And you would take that into the marketplace to see if, well, you've been pre-qualified to see where you fit into the marketplace. That's very important. What I would say is that either one of three things will happen. You're either going to qualify and there's a lot of properties in the marketplace that you can buy. That's a good thing. If there's 5 to 10 properties in your purchase price range, that's also okay. But what happens in the case where what you qualified for, you don't qualify for even the lowest price home in that market? At that point, we would have to probably relook and requalify and do a few things, such as bring in a co-signer, bring in some gift money, pay down some debts. We would do a number of different things for you that would bring you into the marketplace. So in conclusion, what I would say is the mortgage pre-qualification is one piece, knowing your down payment, knowing your lender fees, knowing your attorney fees, knowing your escrows, knowing your reserves to know how much money you have is what you need to get, and then go into the marketplace. From there, if the market is healthy for you, I would encourage you to do the third step, which is now to get pre-approved. Okay, so you could see that we have the 7 to 10 minute conversation. We then have the pre-qualification with the credit report, without the credit report. You test the market. If you're in the market, we do a pre-approval.